Good afternoon, everyone. We'll be starting the briefing in a few minutes, but to kick us off, in the meantime, please enjoy this video.
Most enlightened businesses now believe that the business of business, of course, is still making profits, but also has to do with uplifting the lives of people. That is why in PHINMA, we have chosen to invest in businesses and in communities where our businesses have the ability to enable the communities to achieve the essentials of a dignified life. It's the whole idea of doing good while doing well.
Proud ako maging mag-aaral ng PHINMA kasi alam kong ihahanda nila kami para magkatrabaho agad at makatulong sa pamilya at bansa.
Ibang saya ko na mabigyan ng aking family ng safe home in a nice community. Dahil sa PHINMA, ang dating dream naging reality.
Alam ko sa PHINMA, matatag ang trabaho ko kasi kaya nilang harapin ang pagsubok. Alam kasi nila na maraming pamilya ang umaasa sa amin.
Basta't nagbakasyon kami, alam kong magiging relax ako kung sa microtel or trip kami ng pamilya. Enjoy ang bonding.
So one of the things that we've decided to do is empower the younger generations of PHINMA employees and officers to carry this mission and embrace it as their own, because there is so much more that remains to be done. But the other part of this is trying to engage the rest of the business community to become active partners in this effort. We cannot do this alone. This is a whole of society approach. Business really has to come together. And for this, PHINMA has been willing to be a leading voice in business for good, business for social good, business for uplifting the lives of our people. We really need to push on through our younger generations of future PHINMA leaders who will hopefully carry on the task with the same degree of passion and commitment. That's what I'm hoping PHINMA will be known for and PHINMA will be remembered for.
Hey, so good afternoon again to everyone. I'm glad to see some both new and familiar names. For those who don't know me yet, I am Cara Albert, PHINMA Corp Treasury Manager and Investor Relations Officer. We truly appreciate that you've carved some of your time this afternoon to take part in this afternoon's briefing. So today I'm joined by none other than our CFO, Mr. EJ Kwa Hansen, who I'm sure you're all keen to hear from, given the recent news on the PHINMA Group. Although before I get to it, I'd like to just go over a few reminders. We'd appreciate if you could keep your microphones on mute for the duration of the presentation proper. So don't worry, we will be having a Q&A session after the presentation so that you'll be given the opportunity to raise any questions or clarifications that you might have later on. And during the Q&A session, you should have a Q&A button at the bottom of your screen. You can send questions through there, or if you'd like, you can raise your hand. So, without further ado, I'll turn over the floor to EJ.
Yeah, thank you very much, Cara, and good afternoon to everyone. It's good to see you all again. We do have a lot of exciting news to share about the PHINMA Group, as Cara mentioned. But before I begin, I'd just like to acknowledge and introduce some of the officers in the PHINMA Group that are here present. And I'll just go through the list, not in any particular order. Of course, Nanette Villalobos is our treasurer for PHINMA Corp. And joining her is Grace Purisimo, who's our assistant treasurer. Andre Ramirez is our senior portfolio manager for PHINMA Corp. Then I also saw Danielle Del Rosario. She's the Chief Operations Officer for our newest business, Union Insulated Panel Corporation. Also joining us is Giles Katigbak, who's the Chief Risk Officer. I saw Karen Passes, who's President of FINMA Insurance Brokers. And I think that's all. But it's always good for FINMA to meet the investing public, and we're here to answer any questions that you might have. So as Karen and I mentioned, there have been many exciting developments for FINMA over the last week. Today, we will share with you more about why we're confident in expanding our strategic business units and why we are positioned in the industries where we're in. So I think our chairman and CEO, Ramon Del Rosario Jr., really says it best. But this quote explains how we view our businesses, how they're positioned as a force for good. And FINMA really believes, and you could hear it by his words in the video, that by responsibly and ethically managing our businesses, we can make a systemic change in the Philippines and addressing societal challenges sustainably. As he said, it's a whole of nation approach, but this belief has really guided our investment decisions. We have done this through our investment in education, answering the need to solve the education crisis that we are undergoing by providing accessible education that improves employability for those most in need. We've also done this through our investments in construction materials, providing high quality construction solutions, literally building the foundation of our country. From our legacy steel sheet and cement businesses, we have since expanded to solar rooftop systems and insulated panels, providing clean, renewable energy and playing our part in addressing the food security needs of the Philippines. Shelter is also a fundamental need of our people, and we're trying to replicate the model of education by providing the essentials of dignified lives to our residents. We have likewise positioned our hospitality group to benefit from the recovery in domestic tourism by focusing on providing safe, comfortable stays to our guests. As we've said in previous briefings, FINMA is really in the middle of a growth path, and we will be using FINMA Corp as our vehicle to support the growth of our SBUs. The macroeconomic environment of the past few years has been very challenging, with slower economic growth, elevated interest rates, a weaker peso, and this is being reflected in more volatile capital markets. But this has only reinforced our belief that our customers need our products and services as we increasingly focus on the underserved market. As a result, we've prioritized increasing market share and volume so that we can prepare our markets for the capacity expansions that we have planned, while always looking to improve our operational efficiencies and unlock new revenue streams. You can see that in this chart, where we have sustained long-term revenue growth with consolidated revenues of about 5.4 billion pesos in the first quarter. However, weaker demand for construction materials and property did result in lower margins for those SBUs. As a result, consolidated core net income was 191 million pesos for the quarter. As you can see, FINMA Education continues to provide FINMA Corp with a strong base, almost doubling its net income attributable to PHN on a year-on-year basis. We remain optimistic as we have seen a recovery in demand, combined with our increased sales efforts, which has seen both volume and margin improvements in CMG and PPHC in April and May. In fact, so far for those 2 months, the performance of these two SBUs have been significantly stronger than the first quarter. I'll go into more detail on the performance of our SBUs later on in this presentation. But moving on to our balance sheet, we've really focused on cash generation and looking at the quality of our accounts receivable on a per company basis. The strength of this is reflected in our conso debt service coverage ratio, which is 1.98. Looking at our long-term debt, the duration is 2.35 years with an average interest rate of 5.15%. And you can see here that our debt equity ratio has increased to 2.16, but this is really due to the increased consolidation of our businesses from the One FINMA consolidation last July, namely consolidating FINMA Properties, which has total debt amounting to 4.8 billion pesos. Looking at this as a portfolio, we continue to seek ways to improve our balance sheet while still investing for future growth. We expect our current ratio to improve as our businesses refinance maturing short-term debt, currently amounting to 9.4 billion pesos. This is mainly related to working capital at the strategic business unit level and PHINMA Corp's maturing 3 billion peso bond, which we also plan to refinance. I will now discuss PHINMA Education, which operates 9 schools in the Philippines and 1 in Indonesia. PHINMA Education is focused on providing its brand of no-frills, brass-knuckles education to students in the Philippines and Indonesia. Looking at the demographics of our students, they are primarily from socioeconomic classes C, D, and E, and typically they are among the first in their family to pursue tertiary education. Because of that, our student-centered approach focuses on providing them with the type of education that improves employability, the type of education that gets them jobs. And we've seen good success here, with more than 80% of our students attaining employment within 6 months of graduation in our most recent Tracer study. I am very proud to share that in the most recent nursing board exams, PHINMA Education had 10 top-notchers, with 2 schools ranking in the top 10 nursing schools nationwide, with impressive passing rates among first-time takers. The success of programs such as this, combined with the employability of our students, has really resulted in very strong enrollment growth, with record enrollment of more than 146,000 students in the first semester. What sets PHINMA Education apart is the desire of the group to be as close to the students as possible. This allows us to better understand their needs, thereby providing applicable solutions. The record enrollment is also reflected in the revenue growth, with a 3-year CAGR of 28%, reaching almost 1.9 billion pesos in the first quarter. The strong focus on operational efficiency has also led to improvements in our bottom line, with net income attributable to PHN of 436 million in the first quarter, again almost double that of last year. Last July, PHINMA Corp also acquired an additional 8% of PHINMA Education from our parent company. We recently disclosed the signing of an investment agreement with Phoenix Investments 2, an investment vehicle of funds managed by global private equity firm KKR, and Rise Edu PTE, an investment vehicle of funds managed by Kais Invest. We are proud that this marks KKR's first global impact investment in the Philippines. This investment agreement is for 4.5 billion pesos worth of primary shares. PHINMA Corp will remain the majority owner of PEHI with 61.02%. This investment will allow us to reach more students by expanding our existing campuses and acquiring new schools. Moving on to construction materials, which is the largest driver of our revenue growth, CMG is comprised of Union Galva Steel Corporation, our steel sheets business, PhilCement, our investment vehicle for our cement investments, Union Insulated Panels, our newest business, and PHINMA Solar, which is focused on rooftop solar solutions. As mentioned earlier, the focus of CMG in the first quarter was really to increase volume, to develop the market, for our capacity expansions that will come on stream in future years. CMG is focused on addressing these needs by providing higher quality construction materials. UGC's light steel frames division saw a 31% growth over the same period last year, as major developers are starting to recognize and use our light steel frames in their projects. At the same time, we are also developing products that address the construction requirements of our property and hospitality businesses, actually, as well as our education business as they're really expanding their capacity. Looking at PHINMA Solar, it was the only company awarded in the rooftop solar segment of the Department of Energy's last green energy auction program, with 9.39 megawatt peak. This shows the synergy between UGC and PHINMA Solar, as PHINMA Solar was able to lease rooftops identified by other CMG units. While revenue and net income were down year on year, CMG has really been intensifying its sales efforts, focusing on specific market segments and increasing its coverage of larger infrastructure projects. As I said earlier, we're starting to see this pay off in the second quarter, with April and May showing strong signs of recovery especially as the government projects accelerate. We're also seeing improved margins this quarter. Revenue is slightly lower year on year at 3 billion pesos, while net income was 21 million pesos in the first quarter. But more than that, last week we disclosed two transactions that will benefit CMG. Earlier this year, PhilCement Corporation signed a sales and manufacturing agreement with Petrocement in Northwest Mindanao. That allowed it to manufacture, produce, market, and sell cement in the area. Petrocement has a modern clinker grinding mill with an annual capacity of 500,000 tons of cement. The facility's location will bring PhilCement closer to market, allowing us to address the demand in the fast-developing Northwest Mindanao region while also significantly lowering our distribution cost, which is a strength in that this area. PhilCement is also developing a terminal in southern Mindanao, and this is a mirror facility to our Mariveles Bataan terminal. It will have an initial annual capacity of 2 million tons, and this will allow us to further support Mindanao's development by manufacturing and distributing cement. We also broke ground on the insulated panel manufacturing facility of UIPC, which will be located in Buarque, Pampanga. This location is very good for us as it gives us easy access to multiple expressways, and the capacity of this facility will be 1 million square meters of insulated panels annually. We've already been developing this market for the past few years through UGC, but the construction of this facility will allow us to provide higher quality materials while also improving margins due to the production capability. Along with Danielle and the CEO, Mr. Ed Sahagun, and our Vice Chairman, Dr. Albarazin, I visited a similar plant in Vietnam that uses the same equipment, and we were very pleasantly surprised to see that each shift only required 6 people to manage the facility due to the automation of the system. Insulated panels are part of our solution to the company's food security concerns, as they are a critical component in cold storage facilities. But beyond that, insulated panels also improve energy efficiency and provide thermal insulation. So there are actually multiple applications for this product, including data centers. Properties and hospitality are what we consider our emerging businesses. Looking at housing, the country has a large backlog in affordable housing in particular, with President Marcos expressing his desire to build 1 million such homes yearly. Again, we want to replicate what we did in education, in housing, taking that same formula of applying our management expertise to provide dignity through safe shelter to low-income earning Filipinos. We also try to find innovative construction solutions to assist PPHC in addressing this problem, again, utilizing that synergy with our construction materials group. We brought in the chairman of Gawad Kalinga, Luis Oquiñena, to head our community housing portfolio. We call this community housing because more than just providing housing, we want to develop communities because that's a key element in providing dignity and really making the residents want to be there. We're also emboldened as regulatory moves, such as increasing the price ceiling on low-cost housing, are very supportive of our reinvigorated venture into this segment. We have signed a memorandum of understanding with Iloilo City to provide affordable housing to their residents. Now, the potential to transform lives through affordable housing is something that really excites us. We're also developing our township in Bacolod, which capitalizes on the synergy of the group. PHINMA Corporation approved an investment to establish a Trip Bacolod Hotel as the anchor tenant in this 20-hectare township, which we think is well-positioned to benefit from the rapidly emerging middle market of Bacolod City. What we want to do is to establish an accessible, inclusive, and sustainable community that is affordable to mid-income residents. We often get asked how we will see PHINMA's allocation change in the future. What we want to emphasize, though, is that we see each of the portfolio components continuing to grow, from education to construction materials to property to hospitality. Moving forward, we do think that interest rates will remain elevated, with potential rate cuts beginning at the end of this year towards early 2025. We'll also continue to closely monitor the quality of our receivables and hedge our foreign exchange exposure. But while we do see those continued macroeconomic and geopolitical headwinds, we believe we have the right businesses with the right leaders addressing problems of need that will allow us to navigate those headwinds. And we are again beginning to see those green shoots in the second quarter. We expect this positive momentum to continue. And thank you once again for attending. We're happy to answer any questions that the audience has.
Thanks, EJ. So I just like to remind again everyone, you feel free to send in your questions through the Q&A button, or you can also raise your hand if you'd like to raise a question live. So with that, I'd like to open the floor for any questions. As there's none at the moment, I'll read out first some of the questions that we got in advance. Starting off with PHINMA education, I think we get asked this often a lot. So, what are the major considerations in pursuing other markets in Southeast Asia?
Okay. Yeah. Again, the mission of PHINMA education is really to provide good quality education to those that need it. And if we look at across the region, there's what we call a low participation rate in tertiary education, which is the population that is eligible to attend colleges and universities that actually attends is quite low. Now, for people, especially in the low income market segment, to really have better lives, having quality education is essential. And so that's something where we think that we can make a difference and we can replicate and bring over our business and academic model, which is really focused on that lower income market. If they have the same needs across the region, the same challenges and the same aspirations. So this technology and this expertise combined with reliable and knowledgeable local counterparts will really allow us to grow PHINMA education in these different markets.
Okay, so we have a question here. Would you mind sharing the rationale behind getting back into the cement manufacturing businesses when foreign players like Holcim and Cemex have already exited due to the low profitability in the segment?
Sure. So as a lot of people know, PHINMA was really one of the pioneers of Philippine cement. As recently as the 1990s, in fact, we owned and managed more than 50% of Philippine cement. It's a business we know well. Similar to education, we saw the underlying need of the country. You know, the last few presidents have been talking, President Marcos has continued it, about the need for more infrastructure development. You know, when we go around the country, we see the need for more airports, seaports, better roads and bridges. And so the question of PHINMA was, how can we apply our expertise in this space to again address that concern that will make lives better for people? And the answer was really in 2017 when Ed Sahagun came back to the group and he realized that we could come in on an asset-light model by putting up that terminal facility in Mariveles, Bataan initially to re-enter the market. We believe that by manufacturing and distributing our cement nationwide, we capitalize on that legacy Union Cement brand. But more than that, providing that high quality of cement that can go towards building up that infrastructure. I think it's something we truly believe in. If you look at our people in the cement business, they truly believe in that mission also of making lives better. And I think it's something where, you know, being a Filipino company, we feel that responsibility to build our nation.
Thanks, EJ. So we've touched a bit on education and cement. Just going a bit into properties. So we talked a little bit how properties has a focus of going into the affordable segment. What does that mean for the other segments that PPHC serves?
Okay. You know, again, looking at the affordable segment, if I can touch on this first, we look at the backlog of about 6.5 million units as of December, right? And so that's a segment that really needs housing, but all market segments really need good, affordable housing. So PPHC is going to continue to serve the mid-income and high-income sectors through its projects, but really looking at scaling up that affordable housing segment, as I mentioned with Luis and the community housing, and developing those different communities.
Thanks, EJ. If we may jump back a bit into education, might you be able to share a little more about the strategy of the group in the Philippines?
Sure. The quick answer is expand. There's really such a need for education across the country, and we've really set up our system in such a way that we can quickly deploy it in different areas. So our education business has really expanded through two parts, right? Organic growth, meaning we put up more buildings and we expand to new campuses within the existing catchment areas that we are. And that's something that we're doing aggressively across the schools. In fact, PHINMA Education has a CapEx budget for organic expansion of 2 billion pesos this calendar year. The second way that we've been expanding has been through inorganic growth or acquisitions. Each of our schools in the country have been acquired. And these are schools that have a couple of things in common. One, their location does lend themselves to being accessible to the students and to the market that we serve. Second, these are schools with strong reputations. So what we do when we acquire these schools, immediately, one of the first steps is really to deploy CapEx to modernize the schools, make them schools that students can feel pride in. We also bring in our academic systems, focused again on this market. And you could see earlier the strong results of those academic systems. And so that is, I guess, how we put in the PHINMA education brand into these schools. Now, we're in 9 schools, 9 different areas, but there's so many more in the Philippines that need help. So we think that if we can find these acquisition targets, we can really, again, make a difference and really be that force for good and bring up the education quality. You know, beyond the businesses that we're in, you can also see our executives, like Mr. Del Rosario is also chairman of Philippine Business for Education. Dr. Salazar is the president of that. It's really a passion of the group to provide that education. So even outside of what we do for PHINMA, we look at how we can uplift the quality of education in the country.
Okay. Well said. So we just have a follow-up question to the earlier question on the cement. So seeing as how we're investing into cement facilities in Mindanao, what opportunities are we seeing in the region? And since we already have a facility in Luzon, in Mindanao, are there plans to put up one in Visayas? Do you think you could share a little bit on that?
Sure. The Mindanao market is one that we see as really growing. Over the last few years, investments in Mindanao have gone up quite a bit. Right? At the same time, though, if you look at Mindanao as a region, there's only currently 2 cement plants in the region, meaning that a lot of the cement that goes into Mindanao has to come in from other areas, thereby really increasing the cost that goes to customers. And so if we want Mindanao to develop, which is something that we want as a group, we have to find a way to help address those needs. And to do that, again, we thought by expanding with first Petra and then the terminal that we're putting up in the southern Mindanao, it will really help us to provide the kind of cement that our customers want, right? And at a price point that is more accessible to them. And again, it's, you know, we're proud of the quality of cement that we sell and manufacture. Answering the second part of your question in the Visayas, similarly, we always look out for areas where there's a need, where there's a supply and demand imbalance. And I think it's also important that it's an area that we can supply well. And we've really been using the Cs to do that, so that we don't add on to the traffic concerns of the country, which has been just getting worse and worse. So we're open, but we're not actively looking at the Visayas region right now.
Okay, thanks for elaborating on that, EJ. Again, if you have any questions, feel free to send it through the Q&A button. Here, we have another one going back to education. So, how do we see enrollments growing in the next 2 to 3 years? And how do we see, or how do we expect further movements in the margins? And what would be the drivers of this one?
Okay. Yeah, we continue to expect enrollment growth in the levels that we've been seeing in the past. So, this year, our first semester enrollment was 146,000. Last year, it was 125,000. So looking at a similar growth in enrollment this year. So that's in terms of the enrollment growth, and we do expect that to continue for the next 2 to 3 years. In terms of, and that's just organically, right? So what we're doing in terms of that 2 billion pesos of capex that I mentioned is really preparing the schools so they could handle that growth. Right? Early signs of enrollment for the next school year have been encouraging, and so we continue to push that. In terms of the margins, yes, I expect the margins to continue to remain at the levels we are, and I'll explain a little bit more about that. As I said earlier, we have what we call a no frills, brass knuckles approach, where we really focus on the basics of education, what the students really need. To serve this market that we're serving, as I said, 95% of them are Class C, D, and E. We really have to make um, education as affordable as possible for them so that their tuition fees don't go to extraneous activities that don't help them get jobs after graduation. So our tuition rates right now, with the exception of Southwestern University, our school that focuses on the middle income market in Cebu, our tuition rates are about 15,000 pesos per semester. But we do offer fairly generous scholarships across the network because we do think it's our mission and our vocation to get these students into schools, to get them into good schools and give them the skills, the confidence that they need. So we want to keep our costs as low as possible, and that's something that's always top of mind to our colleagues in education. How they do that is really it's really economies of scale, right? So a lot of the efforts that you would look at if you had a school and just a single school, for example, you would have an academics team at the school. You would have a marketing team at the school. You would have a CFO at the school. To the extent that we can, we centralize activities in the head office. So we have one academics team that looks at the whole system and looks at, okay, how can we come up with a curriculum that fits this market? On, of course, a localized level, that's where the implementation happens. So again, looking at marketing, there's a national marketing strategy with local implementation. At the finance level, yes, we do have a controller on a per school basis, but in terms of the capital raising and managing our relationships, that also happens at the head office. So a lot of these systems get centralized so that at the school level, we have a chief operating officer who focus really on that, on operations. How can we make sure the schools are running as efficiently as possible? How we can serve the needs of our students? And really getting to know the students. That's really their focus. And that's why I think that our margins can be sustained in the future, if not even improved, actually.
Thanks, EJ. We have another question on CMG. So, right, you talked a little bit earlier on how things are improving in April and May so far. Would you be able to share a little bit on the outlook for the construction materials industry within the next few months?
Yeah. I think that the next few months will be stronger for construction materials. In the first quarter, I think there were a couple of things that were impacting it. One was really the delay in implementation of government projects, which has been catching up, and we've been happy to see that. I think we're also seeing demand on the private sector, but more than that, it's really how we're going about selling. So I guess as a result of the more challenging markets in the last few years, where we saw a reduction or contraction in our margins, we've really focused on developing sales teams that address specific needs, and getting to know our customers. I think also in terms of the types of things that we're doing, we're starting to see positive momentum in market acceptance. As I showed earlier, our light steel frames business is gaining more market acceptance. Our insulated panels division has gained so much traction that's why we have so much confidence to put up the facility in Porac, and we just broke ground on that. It was very well attended, the groundbreaking ceremony. We had some of our top customers and clients from around the region coming, and it just gives us confidence that there will be that recovery, and that recovery will be sustained.
Okay, thanks, EJ. Just want to check if there's any more questions from anyone in our audience. All right. If there's none, EJ, do you have any last comments or notes that you want to share with everyone?
No, again, I'd like to thank everyone for attending. It's again always a good opportunity for us to talk to everyone. And if you're shy to ask questions in public, we're happy to sit down with each of you on a one-on-one basis and talk. Or if you want to email the questions, I think the email address is on the screen in front of you right now. So do let us know. We're always here to be transparent with our partners and our investors. And once again, thank you, and I hope everyone has a good day.
Thanks, EJ. And thank you again to everyone for staying and listening to our first quarter investor briefing. We hope you'll join us again next time. And like EJ said, feel free to raise any questions. You can reach out to me or through the email that you see flashed on your screen. And have a good afternoon.
Yeah, thanks, Cara. Thanks, everyone.
Thank you.
Okay, thank you.